Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Wednesday, March 29th, 2023. Crazy, crazy, crazy day. They just started buying the market straight through yesterday, right through the close, right through the extra hour, and then right at the beginning of the Globex session, and then again all night, and then again all day. So it's been quite a powerful little rally in both the S&P and in the NASDAQ. I'm starting here on the daily chart because obviously I've rearranged the count. And I know that a lot of people just get bothered by that, but it's the market that's going to dictate to me what's going on and where its intent is. And then I can fit the wave count because we are in the process of an ongoing correction. So it's very fluid. Each day the market gets to decide, okay, this is what we're going to do, and I can put parameters around that and give thoughts about where I believe the market should go. I can give my thoughts about what's going on economically and how that fits into what we're seeing from the markets. And quite frankly, the two aren't really matching. So I think at some point, one's going to catch up with the other, and then reality sets in. But right now, it is pretty apparent that this larger B wave, so that's now I've gone back. Before I just kind of went back and was discussing an extended ABC up here to finish a wave two, but it's still projecting to likely go above this high at 13,070, which we had at the beginning of February. So it starts to and actually go above this high at 13,084, which we had on the 22nd of March. So I have reconfigured the count and basically leaving all the internal moves there, but changing what has actually taken place. So again, intermediate A wave back at the October lows. So we're looking for an intermediate B wave, and it's going to be a counter trend rally. So as thus far, I have an A, B, C, and I thought, okay, intermediate wave B was done right there. We were off to a good start, but it did not end well because the market decided to pick up a rally here, and it was allowable under the pattern because it basically equaled that high, but it didn't really exceed that high. Well, now we've come down and we've just really run back up, which took away all of and I'll actually bring this down to my 4-hour chart so we can get inside and take a look why this count changed. So again, there's the ABC, and that's where I had placed the B. Now I've removed the B for right now, because the expectations now we're basically just sitting underneath. We're about 100 points away from moving above the high that we had on the 22nd of March, and that would then exceed the high that we had on the 2nd of February of this year. So going back and starting here, that ABC, I'm still fairly satisfied with. So this becomes an A, a B, and a C. So again, not a very clean, kind of a very complex, not an easy pattern, but it turns into an A wave. This was the irregular B wave, and then we got a 5 waves down to complete a C, and I'm labeling that now minor wave X. So this is the intervening X wave within a double ABC pattern. So what I may be getting up here, right now I'm labeling this as A, and I now see that I need to change that just in degree. So I'm just changing the degree so that it all fits, because we've done the A wave. Oops, I want to make that one more. And there we go. And I'm going to change this to a minor. So it's just a degree change, not necessarily a labeling change. And that is the minor B. So looking for an additional ABC of minor degree up to complete that intermediate degree B wave. So instead of being 1, 2, 1, 2, and a whole bunch of 1, 2s, it's now the market has made clear that downside off for right now, back on the table, continued push higher. And again, it has not been an easy task to attempt to trade these moves because the market seemingly right now is not paying attention to what actually is underlying all of this. And so it's a little bit mystical, actually, to me, as to what is actually feeding the strong buying that we're seeing. One thought, and it does actually fit because we're seeing it, we saw yesterday during the decline, we saw the market, actually yesterday was Tuesday, one day I believe we saw the markets really empty, get out of tech, get out of the tech, get out of tech. And so all the tech sector just sank like a stone. And then today we saw everybody moving back in. Now, what I believe is also going on is like March 31st is Friday, and it is also the last day of the quarter. And therefore, we have a lot of rotation, a lot of positioning. What do we want to keep in? What do we want to get out? So as we're moving forward, what do we need to include in our position? Because all of the asset managers and portfolio managers need to make their reports to all of their customers. So we normally will see this. And often just window dressing, they call it. So maybe it was moving back into tech because that's where people think they should be. I don't know. And I don't pretend to kind of get into somebody's head that's an asset manager and have an understanding of what they're doing, because that's not my gig. My gig is trading and day trading. So it is going to take a little bit more time. Now I'm going to open this up. So again, here we are on the 4-hour chart. There's the X wave A, because it was a beautiful 5 waves up, actually, right? So A, and before I was counting it as a C wave. And so that really kind of just tosses it all back out there. So, but it was only A. Here we have the B, very complex, but still A, B, C, finishing the B wave. And then we just ran out of that low. So let me bring this down to the 4 hours. So now we can take a look at inside. And again, still pretty tight. So I'm going to try to get this open, bring it back down, because all I really want to do is look right into there. Opening this up. So essentially, I got an A, a B, and this is a C. C waves are always 5. So I need to kind of take a look at like, where are we on all this? Well, actually, I can do 1, 2, 3, 4, 5, put a 1 here, put a 2 here. And that would fit because they're going to be of a minute degree. I'll change all these to be minute, by the way, as well. So if I did that, I did 1, 2, then we're into third. And it's a 1, 2, 3, 4. Kind of interesting. So it's either going to be we're just finishing wave 1, which would really call for a much, much stronger rally, or we're doing 1, 2, and we're kind of getting up and finishing. We're putting in a third wave. So in any case, no matter how I'm going to count this, the first and most common relationship between a C wave and its A wave, which is going to be this guy, right? If we bring that down, there's the A, is that C is equal to 0.618 of A. So that's my point, was to kind of start bringing in where our Fibonacci is. So basically today we skirted and cruised right past initial very low level resistance in terms of the wave pattern. And that was at 12,935. So above that, we have 13,121. That takes us right above there. So again, we're now, C is taking out the high of A, much what we would like it to do in a perfect world, and we're going to keep this in that category. So continuing to look for upside, we have 13,121. 13,272, 13,422. And you may ask, when should we think we can see that? Well, being that we went up 230 points today, being that we went up, I think, over 100 points yesterday, and then we were like just cruising all night, we can do that by Friday, right? Another 200 from here brings us up to here. Another 200 brings us up into here somewhere. So in between also could work. More important, I want to be able to count a clean 5. Now, this all happened overnight, which is why they're so small. They're just hard to really kind of get a grip on. But if I open it up even more so we can look inside here, and how do I want to count that? So there's a couple of ways. That would have been a little bit of a pullback. That would have been a flat. And then we've got, during our regular session, we had several. This was crazy. It was a crazy opening. Rally. So bullish engulfing, but basically of itself. Bearish engulfing, followed by bullish engulfing. Hourly. That was crazy trading. Then we had a little bit of a sell-off or a correction. And then we started to the market just started to jump. Now, again, I don't have definitive other than end of the quarter type moves. Again, when I compare the moves that we had, and I'm looking at the 0 DTE options, and I know I had somebody really kind of try to get on my case about that yesterday. And basically, my answer back to you, my friend, is that you have no idea what you're talking about. You do not understand how big the 0 DTD options are and what gamma suggests and where these moves go based on what's happening right there. So, and also, just to also place back in the comment section, is that I am not a perma bear. I am nowhere near a perma bear. I am not a perma bull. I am not a perma bear. Once again, I'm going to say, I approach the market without a directional bias. And it isn't always easy when you're trying to do Elliott wave. So I can come in each day and take advantage of the price action for that day. And since most of us can't with any accuracy, including myself, obviously, lately, put parameters around the market, I do my best, and oftentimes it fits within the parameters. When we're in a corrective move, which we are still, there are 13 different patterns the market can take. This, I remember when that happened, we got that huge decline. It was exactly what I was looking for in terms of that level being rejected, and it was cleanly, ran it back up, rejected it again, ran it up, rejected it, ran it up, rejected it, and now we're running it up again. So I fully anticipate, being that I believe it's a counter trend rally, that we are going to get up to a point and it's just going to turn and die. It'll just kind of start falling all on its own, because the premise behind all of this, whether it was the top of a wave 2 looking for a wave 3, or it's the top of a wave B looking for a C wave, characteristics of a wave 3 and a C wave are pretty much the same. In the direction that they're going, destruction. Very, very destructive. In this case, down. Very fast moving. So whatever's going to kick it in, again, there's too many things to choose from, but I continue to just say, whatever will kind of turn the tide and make it very, very clear we're going down and there's no stopping, is, I believe, going to be news generated. So the catalyst will come out via the news. Whether it's going to be economic news, whether it's going to be Fed action, whether it's going to be something geopolitically around the globe, I don't know. And Elliott Wave does not pretend to know anything about the fundamentals, know anything about what the market can and cannot do in terms of economic numbers, et cetera, et cetera. So we don't take any of that in consideration. What Elliott Wave does monitor and does produce are waves that are representative of what the emotional reactions are at that given time. Right now, we're getting a lot of like, oh my God, I got to cover my short. Oh my God, I'm looking at this just explode in my face. And all of these different things that come in, and they're jumping and they're just grabbing. And during the day, the algorithms that are kicking in and producing these big moves are doing many different types of functions. We have sell sweeps, we have buy sweeps, where it's just a buy order just goes and just takes everything in its path until it gets up to a level that it's triggered by, and that's where it stops, and then it's done. So either it fills the amount or it reaches the top level that it needs to get to. So on the way up there are algorithms that are going to go and they're going to be looking for stops. Where are the stops? Where are resting orders? So in other words, the large institutions do come in and they place resting orders at different levels. And that is the liquidity. Remember, a lot of times what an algorithm is really functioning to do is to find the liquidity, either as a buyer or a seller. To achieve your goal of filling the order, you have to go find where the buyers and sellers are willing to exchange and do business. So that's called the value area. So then within the value area, we have what we call a point of control. And that point of control is where at any given time during the day, that's the level where the highest volume has taken place. So during that period, you'll see a market just flip above and below, above and below, above and below a point of control, because everybody's able to get in there and do what they need to do right then and there. Perfect situation. Well, when the market starts to go because we have a larger buyer or a larger seller via an algorithm coming in, that's going to push the market away until it can go and find the next area of value. So outside of that, we can follow other order flow profiles that are going to show us what the value area is. So we have a value area high, we have a value area low, and within there is where the market is finding its value. And in the middle of that normally would be the point of control. So the market rallies up to the value area high, falls back down to the median, which is called the point of control. Sellers may take it back down, test the value area low. If they fill orders and they're done, it usually will rotate back up towards the point of control. This is all valuable, information when you're trading and how you want to trade. So this is what I do. This is what I'm using, plus other things. And the reason I'm kind of going into this right now is because I'm just going to drop it again. I'm even closer this time. I am in the process of revamping the trade room, my own trade room. I'm going to be expanding the membership so that it'll be allowing in more people. And it's going to be on a tiered pricing schedule. And so there's going to be a lot of information. And so what I'm bringing into the trade room and making available for day traders and for other types of traders is institutional information. Where's the institutional order? What are they doing? What are the algorithmic levels? These are all now tallied. These are all controlled. And so when you can get that information, you get a very clear picture of what the market is doing and where are the possibilities of where it's going to go. And you can trade that. So there's some very valuable, useful information, and it's going to be on an institutional level. So again, tiered levels of membership. So look for that. I will be doing a standalone promo for that trade room, and I'll be bringing in also Dan Ascani and myself, where they're going to be the moderators for the trade room, and we'll be doing that type of a promo together, discussing what we will be putting on each day and when the hours are, and et cetera, and how we trade. So it's going to be a great trade room for day traders. And if you're a swing trader, you might pick up some good thoughts or ideas for trading even that. Okay, back to the NASDAQ. So we're inside of this C-wave rally. And so I am going to continue to look for higher levels. We're now kind of, because of the size of the different waves, our fibs are going to spread out. So right now, it is indicating, and we broke above this one, so the next logical level is going to be up here. So I will be able to start to add some additional. So if I'm considering this 1, 2, and I'm looking for a third, well, I can kind of go in and I can put on some extensions. Again, these are just very preliminary because I have not really put a labeling on, so I'm not 100% certain. But if we're looking for this third wave, we have 13,148. That is where, if this is wave 1, wave 3 would be equal to. And again, most of the time in the third wave, it is the longest and the strongest. Now, in terms of a C wave, and let me take this one out. A C wave often will come up to 618. That is where wave C would be equal to 0.618 of wave A. Very common. A lot of that has changed because of the nature of trading and how Elliott fits and how a lot of our moves get expanded, contracted, shifted. I've been talking about that I see more irregular B waves than I have in my entire history of using Elliott. So what's creating that? I think there are a lot of factors that go into it, but it doesn't mask anything. It's just how the market is trading now. And so I'll find them more often in various markets. I find them in the equities, indexes. I have been finding them in the bond market where there is large volatility, where there's huge volatility swings, which we are seeing in the equities and we are seeing in the treasury markets. And that is helping to produce these irregular type of structures. So right now, we're just basically looking for a plain C wave. Volatility does remain high intraday. And again, if you're using the VIX, you're wondering, well, wait a minute, what is he talking about? The volatility went down today. I'm talking about the volatility within the options themselves and the volatility of the move. So volatility, velocity, the speed at which things are moving. And there was some incredible moves today. So again, I want to reiterate, I had a great trading day today. It wasn't always the easiest to trade, but if you had the patience and the forethought to go, well, this is where it really looks like it's going to do, and you could work your trade, it was a really great day. So very positive. And I'm telling you, and where it was positive from, the long side. So again, I'm going to call you out by name. Gary, you don't know what you're talking about. I'm not a perma bear. I traded from the long side today. Did just great. So back to this NASDAQ. I really do think that the next move, even if this is 1, 2, is going to be up here. 13,000. I believe we should get there pretty quickly. I mean, we're really just within 40 points away from 13,000. 40 NASDAQ points, one rally. So I'm thinking we're going to start heading above pretty solidly. Now, again, at 1, 2, I get a 3 up into here, a 4 and a 5 up into here. That all works out, or a 3 and a 4 and a 5. So again, this continues to be a high candidate to contain the C wave and to very possibly then complete this intermediate B wave. So remember, again, on a little bit larger basis, what am I looking for overall here in the market? If I go back to the daily, I've got an ABC X A, B, and one more C, and that then completes a primary A wave. So again, I'm still looking for one more destructive leg down to complete this first section of our multi-year corrective process. Don't forget, I'm not just looking to correct the 2 years or now 3 years that it took us to get from the pandemic low up to that high, and now there's an extra year. So the 2 years, I am looking at that we are correcting. I'm going to go out one more level so that we fully understand. I'm looking for the correction from this low, the 2009 lows. So it's 13 years up to that high. I'm looking for all of this. And actually, you know what, folks? This, when you look at it, great rally, and it was fantastic, and it was beautiful to trade. I got to tell you. But really, what was responsible for all of this? Zero interest rates. Interest rates were so low and held low because of a financial collapse there. a pandemic there and the effects it had on the citizens and also on the corporations, that our government, the Federal Reserve, had to bail a lot of companies and people out of a hole. Otherwise, we would have just turned and dropped and dropped and dropped and dropped and dropped, ended up in a depression. But we didn't. And thank you, government, for standing in and getting in. But in the process of doing this, particularly here, when the government took away deposit requirements for banks, we get this great run, but they didn't have any requirements that they had to keep on reserve X amount in deposits. And then so when it started to go down and they were locked into interest rate instruments, not expecting the interest rates to go up at the rate that they did. So really what we saw and see in the banking crisis right now, yes, it was perpetrated by the Federal Reserve and their monetary policy by holding the rates down at zero, by continuing to stimulate the economy and stimulate everything by injecting money. And a lot of that money went into hands that probably shouldn't have it. And so what they need to do is rebalance their sheets, rebalance the Fed sheets, the balance sheets. And that means taking money back, getting money off the table that's out there. And the only way you can do that is if you don't devalue the currency, right? So they're not trying to do that. What's going to happen naturally is you're going to have to go fight the inflation that all of that money is creating. So we've had inflation building from that low, building. Then we got a little respite because it came down, building again. So there's still a lot to do in terms of the correction. And it doesn't suggest that bad companies, bad anything. If we really had to point a finger, point it at the Fed. Okay, so I'm going to come all the way back down to the hourly chart. So here in the NASDAQ, I'm going to continue to look for higher levels until the C wave is complete. And all of the moving averages are basically back into alignment. Yep, kind of happened that way today. We got the 20 and the 4 and the 8, everything above. So we got the 4, the 8, the 20, the 50, and the 200. So all lined up, and it looks really great for right now. Over in the S&P, kind of the same story. Very difficult count that we got going on here. So let me pull this out to the 4 hours so we can take a look at a little bit of this bigger picture. Same type of scenario, right? This is where I had placed that B wave. I'm taking it off for right now. I truly don't think that, but the potential is there, but I'm not thinking that we will get up quite that high. But if I'm considering this an ABCX, then I have to consider that this will get up close to it. Right, the second ABC. Here's the first and the second. And the 618, which is where I would think the C wave is going to get to, is sitting at 4,255. Now, the intensity of these rallies does suggest that we're likely going to get there, or this whole thing's going to fail. In which case, I would likely move this back to a 1, 2, 1. I can move this. Yeah, I'd work it out because I had it before as 5 waves down. I had a wave 1, and we're looking for the wave 2. That still could be in play. But in any case, I need to leave room because now it does project higher and above 4,100. Before it did not. But now with the revision and with just the market action. And again, if I had to say, oh, well, this is a bullish market, this is a bull market, it's like I can't. I don't think there's anything really bullish about it unless you're totally just using the term to suggest the market's going up. That case, yes, it's a very bullish move. But in terms of that, it's a new bull market off of that October low, no. No, October low. Oh, that's not the October low. All the way back. No. I do not see that. I do not think that any of this is a bullish pattern. But I do consider this some people are calling it a rising wedge, and that may be the ticket, but it's kind of not wedging. It's just rising. So again, we're going to let the market work all that out, and then I will pass on all the things that I know to everybody. So, but here again, if I'm looking for another ABC up, and this is an X wave, I may change my degree and call this minor A, minor B, and now we're looking, yeah, in fact, that is what I want to do. So let me I'll do it now because it's going to make a lot more sense. If not, then truly we'd be looking for something to go against the grain of what's happening economically. It would be really high. But again, so here we have just taking a look at, I'm going to go out to the daily. We're going from the A to this high. So in other words, all of this ABC down to the X wave, so I can get to where the next ABC may come in. Now, if I had to do 100%, where this would equal that, you're looking at 45.14. I actually, in my own self, I do not expect that strong of a move. I would not expect it to go above the X wave, which right now is at 44. 44.30. Let me see if I get this right. 44.33. Yeah, 44.33. I would not expect it to go above that. But it can get up there close. So it may only really come up and equal the highs that we saw at the beginning of February. And that would be at this level is 42.50. And I'm looking for 42.55, which is where the second ABC would be equal in length, or would be equal to 0.618 of the first ABC. Pretty common, actually, in terms of fib relationships. So again, counting this as an ABC down, putting the X wave there. This is the wave A. Here we have wave B. We're into the C wave rally. That's the daily. Let me come back down here. All right, the C, the X. Here we have ABC, 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 X, ABC, A. I'd labeled that wave 2 prior. And then this is where it got really squirrely and nasty. So it gave me heads up, but I kind of kept it together until I could get it done. So that's A, the B, 1, 2, 3. So we can do one quickie right there. And come back down to here. Where can 3 end up? 40.77, close to 4,100. Right off the bat, let's go right up there. Let's finish it. So if we're looking for wave 3 to get us up to there, okay. Then we go to wave 4 and a wave 5. So we're still looking at 41.14 to right there, 41.36. Now, if I take that off, and I would be able to put more once wave 3 is over and I get a wave 4. So right now, I'll take this back off. And we're going to go from this level to that level, oops, and then back down to here to give us the C. Now we got 40.62, and we're kind of coming up, 41.21. So we get these in line, 41.75. It's possible. It is possible. But that would be the entire C wave. So we'll see how this all builds out. We know that there's a very high probability now that we will cross 4,100. And it looks like we're going to do it very quickly. That's the other thing. There was just a mad dash to go grab whatever you could grab today. That's what it felt like. So it wouldn't surprise me to see by Friday, we're sitting at 4,100. And if I look at those options that'll expire on Friday, a couple of big things coming up. In the SPX, there is a very large collar, a position that the collar part of it and the short call part of it is at 40.65. That's basis the XPX. If we add approximately $30, that's 40.95. 40.95 to 4100, depending on how you want to work it. So could we get there tomorrow? We could. The S&P was up $56 today. If we put $56 on here, we're over 4,100 tomorrow. So, and then we have Friday, which we have another expiration, and then we have the quarterly, the quarter end expiration. So we got a lot of stuff going on that we're going to see a lot of positions being turned, rolled, changed, expiring, etc. So this, I think, is all going to be a part of that. So everything remains in alignment here as well as far as our moving averages are concerned for the market to continue to move higher. So again, tomorrow I would be looking for a continuation of high volatility intraday. So the speed at which these markets can move up and down. Again, one of the things that I will be doing in the new trade room is I'll be giving the levels, the 0 DTE option levels that are really going to control what the market does, because as we see during the day, the market will go down and test the put level. And then it'll go up and test the call level. And then I'm not sure what they're doing in between, but they're basically making a decision, and suddenly you'll see them go for one side or the other for the close. So, but what tends to happen right now, and again, if you don't understand options and you don't understand what happens with gamma when options move around and when the prices move around, then I'm sorry, but exactly what kind of sometimes will go on is that they will go down and really monetize the puts in a way and knock out all the holders of puts, make them basically worthless by turning it, monetizing it, and then turning it and running it up. And then they can do the same thing with the call. It's not conspiracy. It's just the way things trade sometimes. And if you've ever been an options market maker or traded options on a very a deeper level, this is all going to make sense. Okay, I'm going to leave it all right there. And so looking for higher levels tomorrow. We'll see what happens. Any turns in the market, they could gain speed. They really could gain speed. And it really could just go. Hands down, it could go. And it might force another adjustment in the count. It really can. I mean, if we get up and I'm able to count 5 and we're not going to get past here, then it could be complete. We get that C wave, and then we're going to get that intermediate wave B. Or we'll take a look and we'll see what actually is going on. All right. That's it for today. Our next update will be on Thursday, March the 30th.